Ashwini Agarwal is founder and partner at Demeter Advisors. He's joining us now. Ashwini, good to have you with us here. It's a pleasure, as always, on CNBC TV18 to speak with you. Ashwini, talk about mid-caps and small caps. What else? We got a big break day before yesterday because there was a large cut, 3.5%, 4%, single days, nothing small. What does that do to this uninterrupted move we've seen from the lows of March, Ashwini? And what's the advice there for that part of the market?
See, Prashant, I'm going to sound like a stuck record here, but I think there are pockets of the market in the small cap, mid cap space that are extremely overvalued, and investors need to be very careful about what they are doing, especially where valuations are extended. This is a story that repeats itself. So, for example, 2 years ago, we had, all the new age tech-led companies trading at, very, very high multiples, and we know what came to pass. Similarly, we saw that with real estate and infrastructure in 2007, and technology in '99, and so on and so forth. So, the point is that in the short run, nobody knows how high these things can go. But valuations in certain spaces are very, very stretched. It doesn't make sense, fundamentally speaking. So, one has to stay cautious. Having said this, it's interesting, what's going on, because there are pockets of value as well. For example, the PSU Bank pack, which has started finally moving, I think offers a lot of value for the simple reason that the banking sector environment is reasonably benign right now. You're seeing loans growth, you're seeing very low credit costs. There is some compression on spreads, but that's about the only negative. So there you might have some more steam. And then you have specific asset unlocking stories, of the type that you're seeing in Bombay Dyeing. I don't own any, but it's interesting to watch how the stock has done. I think there are opportunities, but I think investors have to be mindful as to where the value is and what they're doing and what they're holding.
So one pocket where you see value is PSU banks, Ashwini. Any
right.
other theme that you would like to highlight where you see value right now?
Yeah, Reema, I see value in pharmaceuticals. I think that's again an area where raw material price pressures of the past have abated, and I think business is on a very steady state. Valuations are quite reasonable. I also like downstream chemicals, again, a beneficiary of normalizing raw material prices and transportation costs. So on a year-on-year basis, you'll start to see growth come through in all these areas, and the China Plus One story is fairly intact here. Textiles, which have had a pretty decent run, is another area which looks quite interesting from a medium-term perspective. Short-term, I don't know, because these are volatile stocks, and typically, in a sell-off like what you saw on Monday, it's possible that textile stocks sell off as well because they've done so well. But I think if you were to take a 2 to 3 year view, given what's going on the China Plus One angle, the FTAs with Australia, UAE already signed, and a couple of others in the pipeline, I think that could be reasonably interesting. Obviously, the risk to all this is that any export-led companies could be hit by a slowdown in the United States if that were to come through. But, we've been expecting it for the last 1 year, and the US consumer continues to soldier on. So I can't say whether that will happen or not. It looks that some slowdown is possible. But I think overall, these companies that I've spoken about should still do all right.
Ashwini, just a counter to that point about the chemical stocks. I think you said that you find value in chemical stocks, and they have been beaten down over the last 6 months. But, and while prices of basic chemicals have gone up by close to about 15% in the last 1 month, the counter argument to that is that this is cyclical. Structurally, the chemical prices are still likely to be in a downturn because China is adding significant capacity. So the demand supply over a medium term is still not going to be favorable. How would you counter that argument?
So, Reema, I should have specified I'm talking about specialty chemicals, not the commodity ones. I'm talking about areas where companies are feeding into global supply chains or making complex products or products that require very sensitive environmental handling, including wastewater, etc. Pollution control norms have become reasonably strict both in India and in China. So companies that are positioned to do well on that front are the ones I'm speaking about. So on the commodity chemicals, you're possibly right. But I think where you have companies that are into APIs or into specific products going into the global supply chains, and that's one area where I feel positive about.
Okay, and you mentioned textiles, Ashwini. What specifically? I mean, the yarn makers, the apparel makers. What names there?
So I see the yarn side is more difficult to play because that's a commodity and that always has a cotton lead lag cycle. But I think anything in home textiles, anything in garmenting, those are the areas that I'm speaking about because that's where a significant value addition is possible. And in both these areas, for some players at least, the domestic market is also becoming an interesting opportunity, both through their online presence as well as through branded retail stores. So, the Indian consumer will also take to these products over a period of time. And so the Indian sales may not be much today for some of the large home textiles companies, for example, but I think over the next 5 years, they will get to about 10% or 15% or somewhere there with very, very nice margin profile. So I'm talking more about, again, downstream value addition, whether it's by way of garmenting or by way of home textiles.
Where do you stand on autos? Autos went through a long period of a downturn, close to about 5 years. But again, in the last 12 months, we are seeing signs of a revival. Are we in an early stages of an upcycle in the auto stocks? If yes, is this an attractive entry point? How would you view the various parts of the auto side, the CVs, the PVs, two-wheelers, and even the auto ancillaries?
So, Reema, very interesting questions. I mean, I think the CV space is a very interesting one for me. And some of the auto component side that are feeding into global supply chains might be an interesting place to be. But on two-wheelers and cars, I'm a little confused because there is enough data out there which is suggesting that domestic demand still hasn't fully recovered. So over the last 12 months, we might have seen very large order books, and that was also driven by supply constraints. But these supply constraints are now finally easing out. And I'm not sure how strong the demand is likely to remain over the next 12 months once the pent-up demand has been fully fed. The competitive intensity in the car segment continues to be very high, and market shares are moving around. So that's an interesting place to watch. But the only player there, Maruti, where I have no position, is seeing a fair amount of challenge, even though they have a very interesting model lineup for the next 12 months. So it's something that I'm watching, but I'm not very confident about. Two-wheelers is more interesting, but I think rural demand is still something that I worry about. But I think that's one area where after I would say commercial vehicles, I could see some interest.
By the way, you said commercial vehicles. Ashwini, did you hear Mr. Gadkari's comments and then, of course, the clarification? And what did you make of it?
Yes. Well, these things will play out as we go along. But I think he was hinting more at passenger vehicles. I don't think he was talking about commercial vehicles in terms of the additional excise duty on diesel. At least that's my take. I could be wrong.
By the way, since we're on the topic of autos, electric theme, right? That's going to be a big one. The runway for growth is going to be, the potential is large, and we're moving. Inevitably, the move is happening, will happen, pick up pace at some point. What's the best way to get exposure to that theme if one does not have, that already?
Interesting question, Prashant. I really don't have a very good answer. I mean, if you look at the two battery makers, Maharaja or Exide, and again, I have no position there. They are making an effort. Exide, especially, you would have seen what they're trying to do, with a new plant, with a massive 6,000 crore investment near Bangalore. So let's see what comes out of it. There are some component companies that are feeding into the EV supply chain. That's one interesting way to play it. if you will. But also this is a risk for the mainline auto companies because, like I said, the competitive intensity is very high in the passenger vehicle space, and there is the new element of the EVs being available to the consumer and being preferred. So I don't know how all of this is going to play out, and there is no obvious way to play it via the secondary market right now. Is the sense I have.
Okay. Got that. We'll leave it there. Ashwini, it's a pleasure as always. Thank you very much. Lots, by the way, happening in the private space as well when we talk about, EVs and, a lot of fair bit of investing activity there as well. Thank you. Thank you for joining us with that.